Traders, how are you? Marcello here, founder of the Day Trading Academy, co-founder of Speed Up Trader, where you guys can come and apply to trade our money instead of yours for just 120 bucks. Today, we're talking about the spread trading in futures versus Forex. Great question from, I'm just going to call you Wolf. You guys will see the name here in a second. Don't forget to ask all the questions. Leave hashtag #AskMarcello. And also, I will make sure to answer them all. And don't forget to subscribe here to the channel. So Wolf's question is...
O que você tem a dizer sobre o spread no trading de futuros? Talvez você já tenha falado sobre isso em um outro vídeo, mas não consegui encontrar nada. Obrigado.
So Wolf, the biggest difference and the reason why I mainly teach primarily on futures is because there is no spread in futures, not like there is in Forex. So there's a few markets that I recommend, right? I recommend everybody, stocks, futures to start off with. I tell people to be very careful with Forex. Do not trade in your life binary options or CFDs. They're illegal in the US anyway for the majority of you guys that are in the US. Because when you think about it, let's, for example, talk Forex, right? Because I think you're mostly referring to Forex. Where's the Forex stock exchange? It doesn't exist. Why? Because, well, if you want to buy or sell currencies, right, you can do it in the US, or you can do it in let's say, the UK for the pound, or the euro. You can do it in Spain, France, Italy, Germany, See what I mean? So there's two forms of spread. So the first spread is called the bid-ask spread, which is the difference between the buyers and sellers. So I want to buy a house. The house is valued at $120,000. The seller's asking $120,000. I put in a bid and offer at 80. Seller at 120, buyer at 80, difference in price. Bid-ask spread. In futures, that's the only spread that exists. In the stock market, every market has a spread. Even real estate has a spread, right? Which is the example that I just gave you. But with Forex, binary options, and CFDs, there's something that I call the double spread. So that's the normal spread, right? And then the broker is legally allowed to manipulate your order and put another spread on top of the spread that already exists. So for example, the price of the market, let's say if the house is at $100,000, it's going up and down. I try to sell the house at $120,000. I put in an offer at $80,000. There's the difference in the buyer and the seller. And then I go in to put in an offer at $80,000. And then there's a real estate agent that tells me, no, you can't buy it at 80 because whatever reason, I was representing his house 2 years ago, so you got to pay me the 7%. Or let's just assume it's $10,000, just for the example. So now I got to pay $90,000 for the house instead of 80 when I originally would have bought the house at 80. See what I mean? That's the spread that exists in Forex, binary options, and CFDs, completely legal. That doesn't happen in stocks and futures. So the very financial entity that is there to try to help you to put in your order is literally manipulating your order against you because they can fill you at whatever price they want. So let's assume gold is at $1,200. This doesn't happen in gold, by the way, but let's just assume it's like the double spread in Forex, CFDs, and not binary options. Let's say gold is at $1,200. I tell the broker, hey, I want to buy at the best price. Well, in Forex, for example, where they have the double spread, they might not fill you at $1,200 or $1,199. They'll fill you at $1,180 or $1,980. Excuse me, it's $1,180. But I'm sure you understand that. I didn't explain it the best way, but I'm sure you guys explain what I'm saying. So the spread that you're referring to in Forex or binary options or CFDs doesn't exist in futures and stocks due to the fact that there's a centralized exchange that regulates the information. There's no centralized exchange in Forex, the exchange in binary options doesn't exist overseas. In the US, it's the NADEX. So in futures, you don't have those kind of situations. You don't have that much manipulation. And this is part of the reason why when I teach traders to be able to trade, and now we're the only academy to be able to teach people and put our own money on the line. That's how much confidence I have in our system, where people are able to come and apply to use our money at Speed Up Trader for just 120 bucks. You don't have as much manipulation in these markets because you have the centralized exchange. Now, if you go one step above that, then you can use something like tick charts, where they actually show you transaction-based charts rather than time-based charts like candlestick charts. So instead of seeing 1 minute of information, we see everything that happens in the minute. So that's pretty much, if I'm understanding your question correctly, Wolf, what you mean by spread trading in futures. But as far as I'm aware, there is no spread trading in futures, because the only spread that exists is the one that has the original market itself, which is the difference between buyers and sellers in the market. So I hope that makes sense. Not that long of a video. I mean, it's pretty self-explanatory. This is primarily the reason why I teach on futures, because there's a lot less of this manipulation that happens in other markets like binary options, CFDs, and also Forex. But once you learn how to be able to trade a market, you can trade any market in the world, Wolf. So let me know if you guys have any other questions. #AskMarcello. And don't forget to subscribe.